Hello, how's everybody doing? Today is my birthday. I turned 44, which is ridiculous. Let me close this door, hold on. That's pretty much all I have to say about that. Let's get into some YouTubing. So the main thing I wanted to discuss today was WWE, but I'm going to go into a little bit of everything. But let's start with WWE. So there was news yesterday. David Faber did a report that said that the auction, the process in WWE is basically robust. It's going better than expected. These aren't the exact words he used, so I should be very careful with the words he used. He did use the phrase that a source said that the auction is hot and steamy, and that we should know the results in the not too distant future, and that people that were previously more cautious on this getting to the finish line are less cautious now. He didn't actually disclose the names of any bidders specifically. He just talked about it in theoreticals, and he mentioned Saudi Arabia. Now, the market initially took the stock to like the low 90s, and then it went back down to like 88, and now it's 90. And I think that there's a lot to unpack in this 3-minute video, which you could find on the internet. In fact, I can give you the link for it right now. Hold on. Sorry, give me a second. Where is it? Where is it? Where is it? Where is it? Here it is. Okay, so where do we begin? So the last update that came out in the press on WWE, the last one was 2 weeks ago, and it said that management was going to be meeting with bidders in April ahead of first round bids. That's all it said, and it was a paragraph in a WWE article that was about them trying to get it legalized to bet on WWE matches. So it was kind of like an afterthought at the bottom of the article. Before that, the last article was in mid-February, I think, where it said Vince McMahon wants at least $9 billion for the company. There's been a lot of skepticism in two things. One, that Vince McMahon even wants to sell the company because they think he just wanted to get back in control. And this is all just kind of a farce, and he's just doing it to see if somebody wants to give him, fuck you money for it. And if they don't, he'll just keep running it. And then the other skepticism is whether or not anybody is willing to pay the kind of money that he's demanding for this asset. The stock went down a few weeks ago when Endeavor came out and basically said they won't be buying it. Which is really ridiculous because they were always too small to buy WWE. They were never the buyer I thought that would take this in. If you fast forward to yesterday, Faber's pretty much the best in the business. So if he reports something, it's true, okay? And he had multiple sources. So we're 3 months into this process, and bidders have definitely done their due diligence at this point on the company. And they also know what the minimum threshold would be for a transaction to occur, in my opinion. For Faber to say that there are multiple bidders and that the process is going better than expected leads me to believe that it is highly likely that we will get a transaction done here, and the price is going to blow people's minds away. Okay. The $9 billion number, which, who knows if that's true or not. I think gets you into somewhere between $110 and $120 a share versus the $90 it is today. It's my belief that people are looking at this asset wrong. Okay, this is a once in a 100-year opportunity to buy something that will never come up for sale again. And this asset generates nearly $500 million a year in EBITDA. And I think $1 billion a year or $1 billion a year or $500 million a year in media revenue. That's obviously in the EBITDA number. For context, the NBA gets, I don't know what it is, $4 or $5 billion a year just for media rights. And you could purchase the entire league of WWE, which of course it's fake, it's an entertainment company, for the price of 2 sports teams that most sports teams don't even make money, right? People that are comping this to a sports team are not getting it, okay? This is an entire enterprise. And once you own it, you can do anything you want with it. So to me, the logical buyers were always a big streamer, and they still are. And I think that you have unbelievable content for life that is very profitable. So it would not surprise me if this thing sold for 25 times EBITDA. Okay, this is not a typical media company. In fact, something like this to me, could sell if it wasn't even profitable, where a large streamer just rolled it in to get subs and looked at it as kind of a one-time, $10 billion cost to acquire, millions of fans for life. So the fact that Faber said yesterday that you had private equity looking at this should really blow your mind, because it's already so expensive and it's hard for the math to work for a private equity firm. But I was talking to a friend about this yesterday. This is the kind of asset that a large or multiple family offices could buy and hold on to it forever. It's like a utility in a way. And, there's no reason why they wouldn't be interested in buying this at a 3 or 4%, current cash flow yield, given the high quality nature of the asset. So it's my belief that the market really underestimated the Faber news yesterday, and that, this should be trading in the mid-90s right now, maybe even a little bit higher than that. Your break here, if there's no deal, is in the 70s, low 70s probably. And, Saudi Arabia, I'm told, it's like one of the biggest things they have there is WWE. It's fake. It's not real sport. But there's no reason why Saudi Arabia couldn't spend pretty much anything they wanted on this and have this kind of trophy asset to use for their goodwill around the world, their goodwill. And of course, there would be no antitrust or CFIUS risk with Saudi Arabia buying an entertainment company. It's not a real sports league. Yeah, I love WWE. It's one of my biggest positions. I think it's my second biggest position behind, it's kind of, it's a little bit behind Ocular. I just think it got de-risked a lot yesterday. We did not know. We did know in mid-February. In mid-February was the reason why I originally bought it. When they reported he wanted $9 billion, it said they've already received bids. So we did know there was interest already, and there were firm bids made. But we didn't know that as of now, March 28th, yesterday, that that bankers are considering the process to be robust and hot and heavy. So to me, that speaks of a really, really good auction, and it's going to be a ridiculous sale price. This is not your typical, LBO. It's the only reason why I'm involved. I stopped getting involved in any of those until the credit markets open up. So that's WWE. The other new, actually, that's not a new idea. I talked about that 3 weeks ago, and I pitched it, I think, when it was 82 or 83 on here. So there you go. The other idea that I've recently bought, which is less hot and heavy, but I think really interesting, is a utility, ticker AQN. It's very liquid. And this was a VIC write-up that I thought did a really good job. And the thesis here is very simple. They are in contract to buy an asset in Kentucky, and the deal was struck 1.5 years ago, and it turned out to be a terrible deal. And the regulator tentatively blocked the deal from going through in December, and they resubmitted an application for the deal. And the odds that A, the deal gets approved, and B, it gets approved by the 3rd week in April, when the outside date for the merger hits, are both very low. And if the outside date hits, I fully expect AQN to drop the deal. And as a result, you have a different looking profile going forward than what people were expecting if the deal went through. And the easiest way to explain the opportunity would be for you to go through the January presentation on the company's website, and also look at the March from last week earnings presentation. Look at both of them. The reason why the January presentation is so interesting to me is that it's very clear to me that this stock is in the penalty box with retail investors. Most utilities are owned by retail investors, and the dividend yield and the earnings multiple should re-rate over the next 6 to 12 months. If the deal doesn't go through, significantly. If the deal does go through, however, I still think the dividend yields and the earnings multiple re-rate. You're basically looking at like a 60-cent earnings and like a 48 to 50 cent dividend. And most of these names have kind of like a 4% yield, maybe even in the high 3s. And that would bring this stock to like 11 or maybe even $12 a share versus the $8.20 it's trading at now. And, I also like this because it's obviously nothing like I have in my book. If, the banking sector implodes, people go to utilities for safe havens, not sell them. So I bought this last week, Monday, I think. And the catalyst is the deal breaking near the end of April. I don't know if you'll have kind of a step function re-rate that day. I doubt it. But I think it's the kind of thing where I'll hold for 6 months to a year, and it'll be over $10, 6 months from now. The dividend is safe at these levels. You could see it in the presentation. They basically went from over 100% payout ratio to a 75 to 80% payout ratio. And, I think they'll slowly be moved out of the penalty box. Bye, Brahm. Thanks as always, my friend. Now that you're older and wiser, will you swear off Groupon? Yes, I did not. I have not, and I did not trade Groupon since the last time we talked. Groupon either is going to, go away, go bankrupt in the next couple of years, or it will get acquired by either a small private equity firm or I hate to use the word strategic. There's nothing strategic about Groupon, but as you can see, the stock is in the complete penalty box at $3.50. It's like $100 million market cap. and it is just such a mess. Oh my God. I was right that there was problems, or that was either going to be really good or really bad. I just picked the wrong direction on my very small call position, but I am done. What if the downside the deal goes through? See, Stephen, that's where it's interesting to me. The Vic author argues the stock will still go up over time if the deal goes through. I'm pretty skeptical of the one up, two up, one up kind of thing, which means in every outcome you make money. I don't think you'll make money on day one if the deal goes through. It probably goes down to maybe the mid sevens, 750, 730, 740, something like that. But the math's the same. You're still going to have that 48 cent or 45 to 47 cent, dividend that should grow. And, the yield should be at least, 4.5%, which gets you to $10 a share. So it's a very interesting setup. I mean, if you look back since January, here's really interesting. In December, when they blocked the deal, the stock went down, not up. So I think people are pretty confused, or were pretty confused, about whether this deal is good or bad, or what the ramifications are for it. I think they're less confused now. The stock has basically gone up since January, and I just think it's re-rating slowly but surely. It's just going to keep going up till it gets to the $10, $11 range. But there's definitely a chance the deal goes through. I just don't think it's possible given the time frame they have and the fact the regulator already blocked it in December. And nobody wants the deal to go through. Not regulators, not taxpayers, ratepayers in Kentucky, and not AQN. They don't want it to go through anymore either. Only person that wants it to go through is the buyer or the seller. So I think it's a really good setup. And what else do we got here? Lionsgate knocked the ball out of the park with Wick, obviously. I keep selling that stock down. That was a 100% delta adjusted position for me, and now it's a 17% delta adjusted position. Lionsgate is a broken thesis at this point. They never sold the stake in the business. I'm very skeptical that they sell Stars or even spin off Stars, given the fact that it can't trade by itself, given it's a piece of shit, orphan asset. It's still very cheap. I don't trust the management team, and most of my position is in the spreads. So, for the most part, I'm trying to move on from it. Magnachip, I've added to that, but that's still now just about a 20% position. In the past, it's obviously been way bigger than that. I continue to believe that you're going to see, you have a great setup here at $9.10. I talked about this on Twitter the other day. At $9.10, I think you're paying like $150 million enterprise value for the company. And that's just taking current assets and subtracting all liabilities. I'm giving them no value for PP&E, no value for the tax asset, just current assets minus all liabilities. You're paying $150 million for OLED and power alone was bid, I believe, at $250 3 years ago. And the business has 50% or 40% more revenues today. So that would be valuing OLED at zero, and you're getting the power business at somewhat like half of what it was worth when it had 40% less revenues. So I think it's a tremendous setup. Even if Samsung business only comes back halfway, they should make it up in the China business. And, we'll look back and we'll be shocked this thing was ever at $9. Even though it's like the worst mistake I ever made in investing history. When does the ball open? What ball are you talking about, Glenn? I don't get it. AMPY went from 10 to 6, which was pretty amazing, given the fact that they have the beta coming online in a few weeks. You know, when it was 10 and they put the guidance out for free cash flow in 2023, it was only yielding like a 10% free cash flow yield. So my initial reaction was that's the end of the upside with AMPY. And then, of course, it goes down to 6, and then it becomes a value stock again. So I do like AMPY here. I think something will get done there in the next 12 months, either an asset sale or wholesale the company. And I added to my spreads. I don't have any common because it's too high in margin. I own common in a family account, but I don't own any common in my own account. I put on a position in MSGE. I don't know if I talked about that last time. That is half the Sphere in Vegas and half the they own Madison Square Garden, not the Knicks, but Madison Square Garden. They also own the Rockettes and Tao nightclubs. And that thesis is very simple. They're spinning off the entertainment assets, the MSG and the Rockettes. So that Sphere is its own stock. And at $55 a share, you're basically creating Sphere at like a $500 million market cap. And it costs $2.2 billion to make, something like that. And I am really into concerts. I'm really into live entertainment. I go to Vegas a lot. And I truly do believe that Sphere is going to be a huge success. My skepticism lies in them being able to get tens of millions of dollars in naming rights, given the fact that there is no sports team that's going to play there. So there won't be any national TV coverage of this venue, except for UFC and I guess maybe WWE events, right? So I don't know how much money naming rights is worth if you're not regularly on television like you are with a sports team. And to me, the setup is pretty spectacular because if Sphere is a success in the spring, in the fall, I think you kind of have 50 to 100% upside. And if it's just I don't even think you really have any downside, given the fact they're spinning off MSG and the Rockettes. And I believe the value for that alone is like $35 a share of the $55 in the stock. So this was written up on Vic as well recently, which you can't read unless you have a membership. But that's the story there. It's not a big position. It's about a 5% position. And what do you think about the corporate governance at MSG Dolans? So I think the Dolans are terrible, of course. I think that everything that they've done, you know, I didn't buy MSG originally when they spun it out of Cablevision because I figured the purpose for spinning it out was for them to say, okay, well, we now own this. It's our toy, and we're going to play with it however we want to. And they've kind of proven me wrong a little bit there. They've done a lot of creative stuff. Now they also bought in MSG Networks, because it was floundering, and that was a terrible acquisition, and that robbed MSG's shareholders by buying in MSGN. The good news is I don't really see another way to piss away money here. It would be that they spend billions more on maybe a London Sphere when the Vegas Sphere doesn't make any money. I just don't see that happening. I think that they're pretty aligned with us at this point. And you're getting such a Dolan discount, you know. It's hard to overstate how much 1.7 billion is, which is how much less you're paying Maisie for the Sphere versus what it costs to build it. The market cap right now is 1.9 billion, you know, which is just insane if you think about it. That Maisie. So look, it's not a big position. For me, it's more of an event bet on the spin should happen very soon. It's supposed to happen by the end of March, hasn't happened yet. So once the spin happens, I think you'll be forced for it to re-rate. I will probably sell the legacy assets once it gets to a decent valuation. I have no interest in owning the Garden or the Rockettes, and I would probably increase my position in Sphere. But the beauty of spins, which is why I like Lionsgate, is that if you do have a sum of the parts story that is vastly undervalued, once the spin happens, it almost has to re-rate because you can't value one of the pieces at negative, right? That is the Lionsgate thesis when it was trading at $5, $6. It's less of a thesis now at $10. And it'll be the same thing here, right? Sphere won't be a $500 million valuation. I don't think it will be. If it is, I'll make it a much bigger position. NCR has been decimated with both, kind of lame 2023 revenue guidance. I didn't like the way the guidance was when it came out, and I knew it was going to send the stock down, and I didn't really do anything about it. And then also with this banking crisis. I have not rebought it. I only own spreads there, but I lost a lot of money on the spread, just mark to market. They're June, October, and January spreads. I would re-enter the common if it got back into the teens, but I have not re-entered common there. The key to NCR is still the credit markets opening up. You start seeing real LBOs happen. I think that'll be sold in pretty much short order after that. AYX is also bizarre. It went from 70 to 56 when they announced that they were going to sell senior debt. And that means they're not for sale, but they're like the only cloud company in the world that just sold vanilla debt, and it wasn't a convert. And it's easy to retire it at a very small premium once you do get acquired. So I continue to really like AYX. I haven't added to it, but it's a big position with a ton of spreads and a little bit of common. I think it's like a 15% delta adjusted position. And Ocular, there's nothing really new to say there. It's my biggest position. And we're waiting. We're waiting for two things. We're waiting for the FDA to give final feedback on what the trial needs to look like. And then we're waiting to see whether or not they can execute on a partnership. So we wait. I'm excited to see what happens there, obviously. We also have 12-month data that should come out in the next month or 6 weeks. That's not nearly as important as the 10-month data. All right. Oh, BBIO. I put on a call spread position in that yesterday on the Bloomberg article on Friday. And now the stock's up 15% today because they canceled out of a conference next week. I really like the article, the Bloomberg article. The Bloomberg article said multiple pharmaceutical companies are looking at acquiring them. And there was no really more detail than that. And it's a very complicated company with a lot of drugs in the pipeline. And they have a major readout coming in July. So it's hard to see how they can get acquired before that readout hits. But I mean, if they cancel out a conference next week, it's obviously looking more likely than not. But I put on a 35 basis point call spread position in June, July, and August. I wouldn't put anything on here, but I would not be surprised to see that get taken out in the next few weeks. I don't like any of the banks, Glenn. You know that. Yeah, I'm staying away from all the financials. I played around a little bit with the First Republic preferreds, but I'm staying away. QURE had a presentation. The CEO was presenting yesterday. You can catch it on their website, I think. And he does a very good job of explaining the Huntington stuff. And, I still feel very optimistic that the Huntington's data is going to be impressive and should be impressive enough to send the stock higher. But, that's a big binary in a few months. So I would definitely go watch that presentation from yesterday to get a sense of what expectations are by the company. And I still own all my ARDX call spreads. Yeah, they're Jan 24 call spreads. It's been just a monster home run. Some of those call spreads I'll make 15 times my money on. I've never had a call spread like that in my life. Like I paid 10 cents for $1.50 spread, or I paid for the 2-5 call spreads, I paid 20 cents to make $3. That's 15x. For the 2-5 750 call spreads, I paid 20 cents to make $5. I mean, that's 45x, 50, I don't know what that is. 5 into 20, it's a lot. 25x, I think 25x. For the 153 call spreads, I paid 10 cents. That's 15x. So they weren't huge positions, but when you're making 15x, it really moves the needle. So I'm holding those to OPEX. I feel very strongly that the drug will be approved. It's extremely de-risked. And wow. I obviously wish I kept my comment from one, and I was bigger in it. All right, everybody. Well, it's nice to see everybody. I'll see you probably the next time there's news on one of my names, either in WWE or OCUL. I'll definitely come on here if OCUL has news, either the FDA trial or a partnership. And thanks for coming by. See everybody later. Take care. Thanks for all the happy birthday wishes.